Who's tired? I'm not, because I'm super excited. I could barely kind of stand still. We're in the home stretch, but think about this. In the next hour, we're finally going to debate, was 2015 the year of mobile payments? And if so, what does that mean for 16 and beyond? Each of the panels have largely touched on this. We're also going to give away $50,000 in about 36 minutes or so. And I know there's 3 companies out there that are chomping at the bit, and we as the steering committee have nothing to do with this other than putting the 3 of them on stage. It's all up to you. So if you haven't done so, please vote. It's important. It's important for them. And it's important for you to take part in that to show that you're part of the community rather than your own institution. So to kick off the last panel discussion on mobile payments, we've asked Paul Schaus from CCG Catalyst Consulting to kind of moderate a really interesting panel. Paul brings 30+ years of experience in consulting to banking and fintech players. The core root of CCG has been around what I'll call business consulting and technology consulting, but recognizing the seismic shift from, call them big systems integration projects to more emerging in financial technology, CCG has pivoted to kind of expand into that area. With his experience, he's a recognized contributor to thought leadership. He's actively contributed articles in USA Today, Wall Street Journal, American Banker, et cetera. So we're super excited to have him. We purposely put him here in this slot with his 2 phenomenal panelists. So please join me in welcoming Paul and Dom and Andrew to the stage. Thank you.
Good afternoon. How's everybody doing today? They say being last is best, but we shall see. And I'm looking forward to this. I'm not going to say battle because these 2 guys actually get along better than they disagree, right? So we're going to talk about mobile payments and the level of acceptance. But before we do, I wanted to share a little bit of information about who we are. And I got some data to share because I have a research group that works with me as part of my team. They're the Catalyst Pro group. And we did 2 surveys, one on millennials, one on the mobile wallet. And basically, from that data, I was able to share and add in some information, like how likely are to use a mobile payments versus from a third-party provider. These are not on my slides. So we're going to skip that, I guess. We'll go right into the panel because for some reason my slides aren't showing up. So, Andrew, we've had the release of Apple Pay last year. We have Samsung Pay out there. We also got all the other wallets from the retail, from Starbucks to PayPal. Is mobile finally taken off?
So from a TSYS perspective, what we're seeing among our issuing clients, our merchant clients, is there's been a party. It's unclear that really anybody has come, right? So it's a party yet to get started. We don't see that the blockage is really a technology issue at this point. We think Apple has come out with a pretty elegant solution. Samsung Pay, with the integration of Loop Pay, has made that a much more ubiquitous solution across merchant terminals and things like that. You're seeing increasing merchant acceptance through the app itself. So as Chase Pay, other versions come out, we don't think it's a technology issue. We think largely this next phase is going to be about consumer adoption. What are the appropriate incentives? How do you motivate a consumer to change behavior, right? And that, I think, is where there's opportunities to help influence that.
My wife thinks there's a conspiracy theory that the tip card is to try and get her to use mobile payments because she gets frustrated by putting her card in and waiting for the approval.
That drives my adoption of Apple Pay. It's so much faster.
Well, like I said, my poor wife, who is technology challenged, asked me one day, she goes, is this somebody trying to make me use Apple Pay? So it's kind of funny when you think about it.
Yeah, it is.
Now, Dom, what about you? Are we at the year of the mobile payment, you think?
So hey everybody, I'm Dom Morea, First Data, and I think that the way we've kind of always viewed it is it wouldn't necessarily be revolutionary, that there would be this big bang and kind of sort of that party where it would, we see this huge spike in adoption. I know as we're all very mobile forward now, we tend to think, because technology is so consumerized, right, that you see these groundswells. Uber is probably the tortured example of this. We always felt with payments that it would be more evolutionary than revolutionary. And so while I agree with Andrew that we're not there yet, I do think that we've made a lot of progress over the last probably 5 years in earnest. I think particularly over the last probably 2 years. Okay. Because I fundamentally agree. I think technology was never the issue. There were other blockers. The ecosystem was a challenge. The way to secure these transactions in a standardized way was a challenge. NFC was another. Rolling out near-field communication and having that be accepted in enough merchant locations, all challenges. I think, though, if you look at where we are now, I think we're in an encouraging place, right? Depending on what stats you look at, and Paul, you may want to share some of yours. I think adoption of people that have smartphones probably somewhere in the 15-20% range. Now, do they use it evenly all the time? No, some do. And we're starting to see some of those use cases that are delighting consumers, right? The order ahead in quick service like you'd find with a Panera. And we're starting to see it make mobile payments into places where everyday spend happens. The other thing I would say, just which is important, I guess, perspective, and I think this is playing out, is we always also assumed that there wouldn't be one app to kind of rule them all. Right. There wouldn't be sort of the one mobile wallet that would, kind of take everything by storm. We always felt that there would be a long tail, so to speak.
Well, do you see the mobile wallet and the banking application coming together?
Yeah, I do, and then I don't, right? I think we always felt that there would be a logical progression, and would love your perspective on this too. I mean, I think we always felt like there would be a logical progression where if you had eyeballs, people engaging with their bank and the brand to do mobile banking, that payment could follow in that single app. I think we see signals where banks are, I think they get that, but you also see examples with a Chase Pay, or in other cases where banks know that consumers trust them, right? Trust them from a payment perspective, but they also need to kind of find ways to add value to the consumer shopping journey. So,
well, for both of you, would retail be a good place for wallets right now?
Let me address the point of kind of integration into the banking app of a financial institution. I think it's probably been overthought. The idea and the concept seemingly of having everything together for the consumer to use one-stop shopping, so to speak, reminds me of an earlier phase where banks invested a lot of money to develop statementing to put your checking account, your credit card, your mortgage, your auto loan, all on one statement. Consumers generally responded, that's not how I manage things. That's not helpful to me. Nice concept, but it doesn't actually provide a value proposition to me. So I think you're going to find where things can be simple, straightforward, easy to use, that's going to gain adoption. I think to the extent that you may have a launch pad that goes from the mobile banking app into the payment app, or you don't even need to go into the payment app because it operates behind the scenes, much like Apple Pay does, then I think there will be adoption. That makes sense. But if you put more layers, more screens to look at, even if it's a small screen or simple screen, it's going to impede adoption, in our view.
So why should this audience care about digital payments and banking and mobile wallets? How does it affect them since they're not bankers? So what's their play?
Well, let me see a show of hands. How many people pay for stuff? Right?
Yeah.
We all pay for stuff. We all buy stuff. And I think that why you should all care, I mean, so we're payments guys, right? We're in this thing from the payment perspective, but I think increasingly our work is around making it secure and largely making it invisible, because the really enjoyable experiences, kind of picking up on your point, are the ones that are simple and easy, right? The reason why we like Uber is because it was like, wow, that was really easy, and I didn't have to deal with the checkout step. It's removed, right, from the actual experience altogether. And so I think that as you all serve your markets, so whether you serve retailers, whether you serve financial companies, financial institutions, or anybody in between, food services and the like, payment is a part of that consumer experience, right? And so finding ways to seamlessly integrate that, particularly in, and I'll say the buzzword, that omni-channel experience, right? Where your clients are trying to find unique, delightful ways to engage that consumer, not at the point of checkout, but before it and after it. Mm-hmm. That is why you care about payments, right? Finding ways to integrate the payment element in ways that help your clients' end users save time, save money, feel like they've kind of beat the system a little bit. They're smarter shoppers. That's where this kind of the essence and the importance of this work and this evolution comes in.
So from our perspective, we would see the music is playing, right? So there's going to be a game of musical chairs. The question is, who's going to be left out in that process? Merchants have a definite interest to assert some influence on the mobile channel to regain control of the purchase experience, and that's why you've got things like currency, other initiatives like that. There is also an underlying current that we pick up that we hear from merchants, which is kind of death to interchange as kind of a mantra. And I think the opportunities for companies in the room is if you can help remove friction out of the process, if you can help improve the authentication of who the person is actually using the mobile device that's been credentialed to make a purchase, to actually transmit goods and services, essentially, that will be a value add. Okay. If you can provide solutions to financial institutions to boost enrollment, to boost adoption, that will be a business opportunity. So I think it's going to be, the infrastructure components are there. It's how you can refine and improve the infrastructure and create that engagement.
Now, do both of you see increased use, but do you see it spiking, or do you see a gradual increase between the players here or the users? Or is we going to continue like we've been doing for the past couple of years, where it seems to slow down?
I'll tell you, I think our perspective is I think it'll be a bit of a continuing rising tide. Okay. I do believe that in 16 and probably into 17, you'll start to see some differences in the value propositions that the mobile wallet offerings that are out there are making. One may be better at incorporating loyalty. One may be better at incorporating offers, the kinds of things that get to that additional level of value, right? But I also think you'll see new entrants into the field, right? Some of us saw Walmart Pay announced. It is very, very likely that you'll see other major leading retailers kind of enter that fray. And this gets back to that consumer engagement point I was making, right? Think about the importance to a retailer when they are able to connect with that customer, or maybe even win a customer back or a new customer, because they're able to shop smarter by interacting with that mobile app before they even begin their shopping journey, right? So I think we're going to continue to see a rising tide. Where it'll start to feel like it's really turning a corner is, I think, where consumers will be able to enjoy that even experience, not have to still worry about whether a particular mobile wallet or their device will work in one place and not in another. And we're ways away from that. But that is where I think this stuff will start to feel like it becomes more of a new normal.
Well, let me ask you this then. Do we see this adopting beyond the phone more so?
So I think this is the threat and the possibility. So the whole concept of the Internet of Things, of where you're going to embed payment credentials into different devices, a fingerprint,
Right.
I mean, theoretically. But what it's shifting is, and this gets to the point that things are up for grabs right now. From our business largely, and the business of First Data is, in many cases, financial institution centric. We rely on kind of an ecosystem of Visa, MasterCard, merchant acquirers, issuing banks, and things like that. This opens up the opportunity for new entrants to come in, essentially ride the rails that have now been established, have been credentialized as being safe, trustworthy. So I think that presents a challenge and a huge opportunity for fintech companies of figuring that stuff out. May be very disruptive to our businesses as we look at it. So that's why we're trying to find how can we better cooperate, collaborate with fintech companies in that innovation process to leverage all the assets and the legacy channels infrastructure that we've got, because we do have legs up, because we've already built the stuff, the safety and the security to ride on.
Yeah, it's a great point. Yeah, same. I mean, it's a great point for these guys in terms of why do you care, right? So likewise, from a First Data perspective, our view, very humbly, we're not going to build it all. To that very point, I think this is around a foundation and a platform, and really now creating the opportunity for innovative partners to build lots of texture and cool stuff that lives on top of the payment part of the equation.
Well, how complex has it gotten? I mean, both of you.
Well, it's getting easier. I got to tell you.
It is getting easier?
Look, I mean, 3 years ago, just 4 years ago, I would say, the absence of web services, the absence of the kind of interfaces and layers that are in place now. By the way, not just for large retailers or financial institutions, but even, small and medium-sized businesses. Something we have, sort of on the within our business is Clover, which is a platform, right? A mobile connected point of sale that comes replete with an app marketplace where partners now in the hundreds are starting to build cool apps on top of. So you've got those, those concepts that really were tremendously innovative, right, when the smartphone showed up. Now are starting to now really make their way in meaningful ways where you can build out the kinds of capabilities much faster, much more securely, and relying on those rails in both of our cases, right, to build and innovate. So that's where I think this is all changing a lot.
If you look at the trends here, so I would agree the connectivity question is going to get incredibly, compared to today or even 3 years ago, much simpler, because there's going to be APIs moving from SOAP to RESTful, where companies can connect and they will be exposed to a wider developer audience. Again, to the point, we don't expect that we can invent everything, but we still have a critical role to play in terms of the backbone, the infrastructure. There still needs to be a system of record. There still needs to be all of these things in terms of making the overall ecosystem work that we've invested in, for decades, really. And that's what's enabled all this stuff. So maybe it's a long time coming. If you look at the connectivity and some of the regulation in Europe, which is forcing banks to actually decouple access to financial accounts, that's going to promote financial institutions to solve this. So those are our clients, which means that kind of mindset is going to will be in the North America market from the global bank saying, this is how I want to connect now. So as a company, we've got to adapt. First Data needs to adapt. Anyone who's in the legacy transaction processing business needs to adapt.
Well, both of you are the infrastructure. I call you both running the rails in a matter of speaking. But there's a lot of innovation going on in the space. Are there concerns that there could be a sleepy little guy out there who will become the next giant, who could?
Yeah, I think.
Or is it too complex?
I think when you're in any business, if you're on your game, I think there's a certain healthy level of paranoia, right? That there will be a disruptive element to it. I think well, I know for us, we believe open wins, right? I think that there are numerous examples, and I'll give you one in the payment space because it's recent, where if you try to hug it too tight, if you try to constrain it, chances are innovation will just happen around you. And so the example I would give is mobile network operators, probably about 3 years ago when Google Wallet first appeared, said, look, we want to own the SIM, we want to own payments. They had this whole soft card thing, they launched it, right? They holding on to it very tightly, said, we want to own this new value chain, right? We want to control it. And what happened? Well, all of a sudden you had, a new way to provision, payment credentials to a device, right? That seemingly got, invented overnight, but because of necessity. And so suddenly this control point that they were holding on to so tightly evaporated. And so, open wins, I think we, TSYS, First Data, others, I think the entire payment ecosystem is an example where open, if you don't embrace that, right? If you don't approach it that way, that's where I think you stand the risk of getting wiped out.
Okay.
I'd say a dose of paranoia is warranted, right? You need to look north to Waterloo, Ontario, and BlackBerry, right?
Okay.
So open can mean open in an Android model where everything is kind of wide open, could be open in a managed context, more which, the iOS ecosystem. So I think there's going to be a variety of ways of solving that, but the number one cause of death is going to be arrogance. Arrogance thinking that you don't face the risk. Arrogance thinking, why would they pay for that? Why would they take the risk? And I think that's the challenge, your study, the research that your firm had done, indicating with consumers saying 51% would prefer going to their local financial institution or their trusted. You could have surveyed people before the advent of PayPal, and they would have said, I would never give my money to somebody, a startup, I think it was first called X.com before PayPal. I mean, just crazy stuff that it's like, really? That's where you're going to give your money? Now it's like it's accepted. And among millennials, I think your study, as you were sharing with us, that's their number one pick. So I think things can change pretty quickly in this landscape.
Well, I'll save a little bit of time because it looks like they got it up. So when we get to the end, I'll share it, a few minutes of it. But in the meantime, where's this landscape going to go? We dance around it, but you guys are a big piece of it. And I don't see it going away. And everybody needs you, in a matter of speaking. You're part of this ecosystem. But mobile is just another device, I call it, because the Internet of Things is being developed. All this is happening around us. There's a lot of innovation coming along, a lot of ideas coming along. So my question really for both of you is, for 5 years from now, are we looking back at something that, oh yeah, we used to talk about mobile payments and it's here and there gone, or is it really integrated into our environment in such a degree that we can't live without it?
Well, I mean, I'll give you my opinion. So how often do you talk about your credit card working? Right? You don't.
Only when it's not working.
You don't, right? Right, when it stops. And I guess there was a panel I was on some time ago, and I said, look, we'll know when we got this all right when nobody cares to talk about near-field communication. It's like nobody talks about the technology within a magnetic stripe. We're talking about the chip technology now because it's important and it's new. But I do think that if we've got this right, it just blends into the background.
Yes.
Just like you don't think about when you make your payment, whether you're shopping at Amazon, right? It just works. For those Amazon Prime users, especially true. Just like the case of Uber. And I think increasingly, I'll go back to the Panera example. For those that, order ahead while they're on their egress to work, they don't think about it. But what happened is they saved time queuing on that line. They get to show up, grab their, their coffee and their, their meal preference, and they're in and out the door or through the drive-through, right? That's the kind of stuff that I think, will just sort of blend into life. I do think, there's a great opportunity, to the point Andrew made, that there is a great opportunity, I think, differentiate where there's a variety of, I think, places where we can delight consumers in combination with retailers, financial institutions, technology providers who suddenly say, wow, that was really easy. I saved time. I earned loyalty points, or I was able to redeem them in a super easy way. I think the next couple of years is what will be hopefully and ideally filled with that.
Will the industry accept the foundation? I mean, will you all accept one, hate to say, process?
I don't know if it requires one process. We've already got standards set that offers interoperability between all the parties in the ecosystem. Even if you drop down to the lowest form of ISO standards, right, just ancient stuff, it still works. We still can move money around. We still can clear transactions. We still can capture all the relevant data that we need. And I think, people will not think of mobile payments. They will just think, I'm paying for things. Just as we see in the merchant space, integrated software vendors where they've got that integrated to the POS, it's because if you make it that someone doesn't even need to think about it, then you're entrenched. That's where the opportunity is. So if we can get to that point and capture it before someone else does, that's the opportunity or the risk. Because some of these things, once they get ingrained, will become so behavioral that you're not going to change it. Or even appreciate that you have an option of changing it.
Yeah, and if I could just build for a moment back to the tech community, this whole point of it's just not this peanut butter spread. It is very much a use case driven opportunity, right? So if you think about what happens when you're buying gas versus what happens when you're buying food, places where you shop and how you check out, right? Very different if you really think about it. Those are the places that we're excited about. Those are the places where we're looking and innovating, because that is where you can start to unlock and find things that are really delightful to consumers that maybe they didn't even know that they that were annoying or time-consuming before.
Okay, so in the future, payments are just, what you're saying is they should be just in the background. They should almost not even be a thought of. We're going through a process now of paying. In the future, it might be all integrated to where when you just put your fingerprint down, everything happens.
It's,
for instance.
People ask me, right, it's like, what do you do?
Yeah, what do you do?
I explain, well, I'm in the payments business. I say TSYS, it's like never heard of them.
Right.
Right? And we're good with that. We don't necessarily want a consumer brand that people know about us, because that's likely that something bad has happened, right? If we can run silently in the background, it always works. It's always safe, it's always secure. Financial institutions will gravitate towards that. Financial institutions on their procurement, and this is really kind of a recognition for the fintech companies, there is a barrier out there.
Yes.
It's the regulatory barriers, the vendor management process, procurement. It is actually a 4-letter word, but it's longer than that, I guess. Going through those processes, that's going to be really difficult for smaller companies. And I think that's the opportunity of partnering with TSYS or others in the community that are open for that collaboration, because we already hold that trusted position.
So what you're saying is part of the obstacle why we have this slow adoption is the bank's resistance because of, I hate to say, vendor management and risk and compliance, of them working with some innovative companies.
That certainly can impede progress.
Right.
Of just trying something, off the wall. The financial institutions that I've talked to, it's with regret. They say, well, those guys don't have the same burdens I have, and they hope that they get regulated, which is kind of funny. But I think innovation ultimately is going to prevail. The good ideas should prevail, should gain traction. You do find occasions where the better idea, the better technology doesn't win out because you didn't find a way of collaborating.
Well, let me ask you this. If you're a small startup, and let's say you have a great product or solution you've created, but it requires the payment rails, how does a small fintech that has very little capital get into the business? Or how many doors do they knock on and get frustrated?
Look, I would say it's easier than ever before, right? So
now it's a little, I would agree, it is easier than it used to be.
Yeah, it's easier than ever before, and I think that in our case, and I think in the payment industry in general, the ability to find interfaces, to test in sandboxes, to do this quickly, easily, because of the existence of web services is easier than ever. You know, back to the point that was made, the work that has been done over the last 5 years is to remove all of that detail and that nuance, right?
Okay.
We've found the way to do that and make it, in my opinion, very simple for a fintech, for a startup, to say, look, I need to consume payments. I need to be able to, you know, provide a payment acceptance function within my service, within my solution. I tell you, it can happen within an hour.
Do you find a lot of fintech companies knocking on your door?
Yeah, I mean, we've got a constant stream. We've got a couple of hundred people in Silicon Valley that are based there, as well as headquarters here in Atlanta, and it's busy.
And how is TSYS working with fintech?
We're approaching it the same way with representation wherever there's innovation, right? And that's really a global quest, because all the good ideas aren't necessarily in one locale, right? So I think the funding environment is much more developed, much more embracive. You go back 6 years, probably 5 years ago, in the throes of the financial crisis, private equity, venture capital touching anything with consumer finance is like that's touching the third rail. So you will see cycles like that influence it. Right now, the fintech funding environment seems to be a pretty decent space to be in. We work very closely at TSYS with TTV, which has participated in this event today, to help source and identify, companies that we should put on our radar screen and find ways to work with. So we are seeing a steady stream of the ideas. So it's a number of things. We're changing, the environment is changing to enable this stuff. That's how we see it evolving in the future.
So if either one of you could give advice to people in this room, and then, like I said before, they're not bankers. Most of these are companies that are either working as fintech startups or they're investors. What would be your advice going forward if they want to get into the payment business or they want to invest into it?
Well, I would say a couple of things, because that's a wide range, right? I would say that you just continue focusing on where your clients' needs are, and I think that, to the extent as you devise, you invent new solutions, right? Help them achieve what they're trying to do. If it's engaging customers of any type and size, I would tell you that the payment aspects of this, really have been figured out. I think also, being open for business as it relates to innovation, when it comes to a lot of these value-added kinds of things that wrap around the shopping experience and are very connected to payments, I think those are places we'd love to, engage with you guys and are prepared to engage in helping you find and come up with some very, very innovative ways to solve those problems.
I think to your question, as you posed the question, the first thing that came to mind for me was the line out of The Graduate.
Right.
It's the future, plastics. We've been in a plastic-centric kind of schema of the mag stripe chip. That's just an evolution. Where you go to host card emulation, where we've essentially, that's getting blown up or will disappear. The payment aspect of things will become invisible, will become embedded. So in that space, I think the opportunities are not so much how you embed it or the technology of things, because a lot of good work has already occurred there, but it's in the data from those transactions. How do you discern fraud patterns? How do you understand what's occurring? How do you leverage geolocation information to triangulate that that's really the real person, or to authenticate a device that device itself is a trusted device? So it's in the information, the analytics. If all of that helps reduce risk, take risk out of the equation, or drive engagement, there is a wide open market for that. Merchants will pay because at the end of the day, the merchant wants to sell the merchandise. Financial institutions want to cut the risk, and even to the extent that interchange rates or the normal kind of revenue model gets altered, as it was in Europe most recently, it still means that they will want to take the risk out. those things are going to remain as common elements.
Well, speaking of merchants, you have this adoption rate. Well, we're going to see it happen again. There's going to be another device change eventually, probably sooner than later. Is the U.S. always going to be, it seems like, a drag to the rest of the world when it comes to processing? Because when I travel outside the U.S., payments is a different world. When I'm in the U.S., I feel like I'm still in the Flintstone period.
I don't feel that. Just different experience for me. I mean, there are always going to be differences, right?
Is it because we're
different
behind?
pace and different approach. I mean, is your example because of EMV and sort of
More convenience.
Okay. Yeah, look, I think there are some amazing things going on across the U.S. I think in terms of, mobile payments is a broad example of that. To your question about, what's the next form factor, or the next device, I mean, take a look at Google Hands-Free. So I don't know if you guys are familiar with that, but, there is no plastic, there is no phone. I show up, and, through the magic of technology in the cloud, I am authenticated, and I'd say, hi, I'm Dom, and I'm here to pick up my order, and it's paid for, right? That level of, friction.
So you're telling me that's sooner rather than later?
Yeah, I mean, it's, to probably quote another movie, other than The Graduate, it's kind of like The Matrix, right? There is no spoon. There is no, there is no form factor, there is no device. I think ultimately, it can get to that place. And I think there's already some examples, for sure,
But see, remember, when I started in this business, we were supposed to be out of cash by the time we hit the 90s.
Yeah.
And checks were supposed to be gone by the late 80s.
Wow.
But so let me kind of touch on that. I think the idea of looking at the US market as being behind is fundamentally the wrong framework. We built a system here in North America largely that was incredibly efficient. It works reliably, securely. We didn't need to really alter it. The value prop on the fraud reduction by chips or EMV isn't that material.
No, it's not.
At the end of the day, because people are still running around with plastics that have a mag stripe. So you lock the front door, but the back door is wide open. So I don't think that's fundamentally going to alter it. I think what other markets have adapted to, and you saw this with cell phones, is that in many developing countries, they didn't build out and string wires to go to plain old telephone services because that's the evolutionary path that you gotta go to the kind of chimpanzee versus, I mean, they just jumped ahead. It's like the technology already exists, we're just going mobile. So here, we've already had the infrastructure, why rip it out if it still works?
Well, that's the other side of the argument. It's ripping it out is because there's so much invested into the infrastructure, you can't afford to rip it out.
It's generally fully amortized at this point.
I know.
So,
well, now,
I mean,
now yes,
yeah.
but I'm talking about that.
Right.
Okay, so it looks like we're near the end, but I wanted to give a few minutes of the research we put out. So the slide that's up on the screen that you've seen, I'm not going to read what it says, but there's an interesting statistics on this. This is a mobile wallet preference we asked people, all age brackets, and still PayPal was 45%. And when we just zero in on millennials, 35 and younger, that jumps to 86% are PayPal is their preference. Still, we asked both groups what their preference would be if a bank was behind a wallet, and it's still a majority are safety with the bank. And I think that goes back with, again, that banks represent trust. That's what they really represent. We have a problem with the telephone company or even to some degree, Google and Apple Pay from a complete trust perspective. And that's what this survey shows. And I wanted to share that information because there's a lot of information we pulled out and it shows that the wallets are gaining. What I was a little surprised on this is that PayPal itself, I knew was the winner, but I did not realize 86% of millennials consider PayPal their number one wallet. That's a lot. And they're the ones that are out there spending the money. So we're pretty much, I think we started a few minutes late. We're supposed to end it right about now because of the 4:45. I think we passed it. So guys, any closing comments you want to make to the group?
Just one comment. We appreciate the opportunity to be here today to kind of share our viewpoints, and we're open for business.
We're open for business.
Yeah.
See, I love this guy. He's out there doing business development on the stage.
Yeah. Thank you.
I know you're open for business.
Yeah, always. Thank you, everyone, for the time. Appreciate it.
Thank you, guys. And I look forward to hearing who the winner is.